Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. We're broadcasting from the 80th Annual Convention of the National Association of Farm Broadcasting. So you're going to hear lots of noise around us because, a room of farm broadcasters is not a very quiet place, but a lot of things happening within this market trade that we're going to dive into. The Cattle on Feed report, if you remember to last week's episode, by the way, thank you for all the folks that commented about last week's haunting of the Cattle on Feed report. Unfortunately, is that haunting continuing as we have another report coming out on Friday? Are we going to be butting heads with this report? We're going to find out those details. We're going to look at some technical and fundamentals. Also, we're going to talk a little about a birthday trade. What do we see? Where we need to be come mid-December. Lots to look at. We've got lots to talk about. As you see, Brad Kooima joins us. He is with Kooima Kooima Varilek out of Sioux Center, Iowa. So let's talk about this Cattle on Feed report. I mean, we had such a continued repeat of this report that other reports seem to come and die, and this one did not want to do so.
I'm sorry. You know what I want to say? I'm going to say it anyway. I'll clean it up. Yeah.
Okay.
The last Cattle on Feed report reminds me of someone having gastrointestinal difficulties in church, right? It never goes away. It's there. Okay. You're absolutely right. Thanks for having me on, Susan. It's fun to be on with you always. And I can imagine what a noisy group you've got there for sure. The Cattle on Feed, just hung in the air like, I thought since the last report, because everyone was kind of like going like, well, heck, how is this possible? We kill 4%. The year-to-date slaughter is 4.7% less than a year. How can you have more cattle on feed? And then, you start to get some of these preliminary guesses for this report that's coming out Friday. And so it's like, there's no question in my mind that for some anyway, it really turned the psychology. It really changed the perspective a lot of people had in the market and seemed to, start that whole, we were off the highs by a ways, but certainly triggered another $10, $12 break in the futures market. So, waiting anxiously for this next report. I just wanted to give you a minute here to put some of this in perspective, because I got people calling me and saying like, geez, Brad, they're guessing 106%. On the placement number, and they are. That's the average trade guess. That's what we're going to compare to Friday. And they go, how can that be? And I can say, well, it can be because we're placing heifers still. It can be because we've had a tremendous increase in the number of Mexican imports. To a lesser degree, we've got some Canadian imports. And I think we're placing cattle ahead of time because the guy that owns the feeder cattle loves the price, right? He likes this high price feeder market, calf market, and he's been aggressively trying to sell his cattle on time. But now, here, for the sake of having some perspective, reports are year-on-year comparisons. A year ago, the placement number in October was a record low. The record low. So we're comparing to a very, very, very small number. Another way of saying it, if we would come in at the guess of 106%, that number would still be 4% below the 5-year average. So, okay, take a breath, everybody. That this isn't quite the, oh my gosh, I was wrong with everything I thought, type of a deal. Put it in perspective. Look at what the historical deal is. The part of the part of the macro, if you want to call it, the cycle thing that still I think find fascinating is the fact that we're not rebuilding yet. Not at all. And, we'll see once here as we move forward, whether we see any heifer calf, the calf thing retention, but we certainly didn't see it in the yearling type deal. So now I have heard reported, and I would be curious, I haven't talked too much down there in Nebraska, but when I talk across the Dakotas, Colorado, Wyoming, Montana, I do hear a pretty consistent conception problem, a low, very, very poor pregnant preg check deal here, especially on first calf heifers, blaming the extreme heat, things like that. So all of that plays into this deal. But I just wanted to give a little perspective to the guy out there that just hears a number of going like 6% more. Oh my gosh, put it in perspective of what we've been doing the last several years.
So when you look at all the categories, and we talk about, the heifer numbers and the concerns that we saw in last month's report and the questioning came, what is the one area that you think could cause the markets the most stress once those numbers are released and we have the weekend to kind of digest them?
Well, I think if we have another round where the placements stay big across all weight categories, first of all, that was the thing about the last one. I would have been a little more tolerant had that shown, a big increase in the number of lightweight cattle, particularly in Texas, where they still dry. Mexico is still suffering from a drought where you're still plowing in all these lightweight calves. But we saw it across all categories. So it seems like, the whole feature to the market is that you still got a very willing guy that does not want to save a yearling type heifer. He wants to take the money. And that when I talk to those people, and hey, there's still some people too that are looking at, rain this year, but one robin doesn't make it spring. They're not confident at all that they've got an excess amount of feed supply or grass. So they're still probably influenced by that as well. So I'll be interested to see that. I'm hoping that maybe the marketing number will be a little bit better than they thought. And I guess I'm also already starting to look forward to this January inventory report. If indeed we're placing this many cattle, then we have to have a lot less cattle outside of a feed yard available, to be placed. So, again, chasing that carrot around the grandstand here, long term, it still looks to me like you still got a tight supply here.
Well, the carrot turns into the turkey of next week. We work past that Thanksgiving holiday and that one turkey day. What do you see for this market as we get ready to hit the month of December?
Well, it probably leads into what a typical, and I feel like I should give you the disclaimer, right? Seasonals are only seasonals. And if all you traded was seasonals, you'd go broke. Okay. But the seasonality of the market here at this time of year is if you think about it, it makes sense. So the North makes up 25-30% of the total overall supply of the cattle because of the seasonality of spring calving, right? So you go into different supply. This time of year, typically we're finishing up on the big calf run, and don't have any yearlings fat yet. From a demand standpoint, you got a little lull here because of what you just described. With the Thanksgiving holiday, not a beef traditional deal. But then when you get on about now, for someone that's going to procure the meat for after Thanksgiving, he's looking 2 or 3 or 4 weeks ahead, right? And the demand, as I'm told, has still been very, very good for the middle meats, the high price stuff going into the holidays. You listen to on TV of what they expect, the shopping deal this year, they're expecting record stuff, right? So we'll see. I think as we move into the holiday period, we're going to see very, very good domestic demand. So there you get into that seasonality of sometime during the first part of December. Typically you're tighter on supply because the calves are gone, the yearlings aren't fat, you're going into a better demand period. And if you looked at the seasonal book, you'd see that normally by the end of the first week of December, the market has bottomed and turned higher. You talked about in your little prelude there about that's about a week ahead of my birthday. So that's the joke around here. So a week before my birthday, you got to pay attention. So.
Inflationary concerns? What do you have for these? Looking at
the news of the week, CPI, is a factor certainly here in our markets. The sharp up in the stock market, the sharp break in the bonds, all telling you that maybe, just maybe, what's happening here is we aren't going to see any rate hikes. And of course, that's a reflection of how the economy is slowing. They got the rates high enough that we're going like, oh, yeah, I'm not going to build a new factory. I'm not going to buy a bunch more cattle. I'm not going to, the list goes on and on, right? You're not going to borrow a bunch of money when you got to pay 8.5% interest. And so things slow down. Now, the stock market for now likes that because they don't want to hear about any more rate hikes. But this means that we're getting a slowdown. So hopefully the inflation thing slows down. This week, all week, putting gas in the pickup, it's under $3 where I live, so that's lower. So let's hope that we calm that and notice that we haven't talked about geopoliticals today. Is kind of nice too. Not that is over, but it does seem like we're not talking about it as much, either the Ukraine or the Middle East thing. So, but yeah, that can change in a heartbeat. But the cattle thing today, I think, back to the bottom line of the deal, cash got better. We saw a bunch of panic selling last week, and I get it. You do what you got to do, but we're getting bid 180, even a little 181 in my backyard today. That's $5 to $6 better than what some cattle were traded at Friday, and futures are discounted. So we trade a little. It seems a little more sensible today to me instead of that, it's going to zero type of mentality that we had. We broke $23, $24. That's about what we broke after mad cow disease, for goodness sakes. So it's about enough, I think.
Let's get some positive moved our way, right?
You got it.
What's the best way for folks to get a hold of you, Brad?
Well, 800-358-3047 works. Or if you want to learn a little more about us, kkvtrading.com is a good place to start. Thanks for having me.
Thank you. We'll catch you right before Turkey Day, which should be Beef Day, right?
I'll be here.
All right, sounds good. As we always remind you, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's been this week's Cattle Call on the Rural Radio Network.